And good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, January the 23rd, 2022. Globex is starting on the upside this evening, and the market, particularly the NASDAQ, is now moved back above 14,500. Now it opened, slid a little bit lower, got below 14,000 down to 14,378, and that looks to have completed the minute third wave of the minor C wave down. And let's kind of dive in to see where we are, what some expectations could be moving forward, at least Monday, Tuesday, Wednesday. Now, what we have going on next week is the beginning of all of the larger tech titans beginning to report. So that first, if we just kind of go over this again, so that we have an idea of what is to be expected. We have Apple on the 27th. So that's Thursday. We have AMD on February the 1st, which is next Tuesday. Then we have Amazon on the 3rd, which is next Thursday. We also have Facebook on the 2nd of February. Google reports on the 1st of February. Microsoft has already reported, they report on Tuesday. Their dividend is, they've announced their dividend, but they will report their earnings on Tuesday, my mistake. We have Tesla coming in on the 26th, which is next Wednesday. So we have a couple of larger of our tech titans coming in with their reports, plus there will be a flurry and a slew of additional NASDAQ components reporting, but these are the titans that we're keeping our eye on for what could possibly lead to an additional slide or a decent rally. Now, let's kind of now take a review of what else is coming next week. We have the first Fed meeting for 2022. That starts on Tuesday with the press conference and the results of that meeting coming on Wednesday. So Wednesday could be, we actually, let me just rephrase. We actually, on Monday, Tuesday, Wednesday, we could be slow to sideways as the market just sits in anticipation of, number one, the earnings, number two, what the Fed is finally going to do. Now, I know that the expectation, simply from the market reaction that we've had more recently, is they are now expecting rates to go up. And so it makes perfect sense that we kind of sit and pause till finally we get that news. And it doesn't necessarily have to be one of those like sell the rumor, buy the news. It might not happen that at all. In fact, it could just be sell, sell, and sell. Sell the rumor, which is they're going to raise rates, which we know now is fact, and then sell when it actually happens. So that's still out there. I'm not going to predict either way what a market's reaction is going to be. I just think that what we need to do now is just update our Elliott, update this picture, and see how that all will come into play as our next week unfolds. So I've started here on the 4-hour chart. On the 4-hour chart, I am continuing to count the development and the progress for an intermediate fourth wave correction. Thus far, within that intermediate fourth wave correction, we have minor waves A and B complete. Now we're in a C wave decline to finish the move. Now within that C wave, it will consist of 5 waves of minute degree, and 1, 3, and 5 will be down, 2 and 4 corrective. So far we have wave 1, wave 2, then we got into this third wave, which truly just turned into a beautiful third wave with the 3 of 3 putting in a really solid couple of days of strong downside action. And that just fit to a T to what our expectations were for this wave down and where it reached. Now on Friday, we dipped just down to, I think, 408, and then ended up closing at 14,411. That's exactly where that support line was. The 382 for the intermediate fourth wave was at 14,411. Stopped right there. What happened now? We got a little additional push lower as some initial selling that needed to take place came in, did it, got down to 14,378, 379, and then it's now launching higher. Now we were just up 100, now we're pulling back. That I suspect is going to be the continued play all through the reactions. Now, I have gone ahead and labeled this. I'm going to go back down to the hourly chart so we can start to see inside these moves. I've gone ahead and labeled it as this minute third complete here, as you can see. So I put in this sub-minute wave 5, which here we have 1, 2, 3, 4, and then 5. And it reached support. It's now dipped below support. It's now rallying back above support, which leads me to believe that it is the completion point. And then I can go ahead and mark minute 3 as being complete. Now, if indeed this is only 1 of 5 and this is a 2 of 5, we're going to get a 3 of 5. Let's just take a look at what those expectations could likely produce. And again, this is not a call for a lower market. This is now, all I'm doing is showing you what the potential and the possibilities could be should the market not be done with this third wave. Now, if we continue to rally, we do it in an ABC, and I will put in some retracement numbers for us here in a minute, then yes, possibly we're going to get that minute 5. And if minute 5 starts to kick in, then yes, the expectation is we're going to drop down to 13,396. But it's an area and a number that I've been talking about for a while as we work through the Fibonacci levels and how they correspond to the move and how each one that corresponds to waves within the move. Okay, so what if this is the end of 3, I am looking for a little bit of a rally. And that rally is likely could be reaching back to 14,665, back up towards the 20, at least back up towards the 8, the hourly 8, which is at 14,576. Now we're already, I've seen a high at 534. We're backing off, pretty normal ebb and flow of the market thus far. And so if we can get up an A, a B, and a C, and that's all done by the time we come back in tomorrow morning for our full session, then we can expect the market to again start to move lower. Now that fits the overall negativity that's now swirling around, but it also fits the Elliott count. And this is what I think is important. Once 3 is done and the 4 is done, I'm still looking for a minute 5 to finish that minor C wave. So, and that's as far as I'm going to go right now, because again, I continue to discuss the possibility that, well, like the S&P, there's a stronger possibility that the NASDAQ has also finished its massive rallies, it advances over the long-term picture, and we're going to be completing a cycle 5 and a primary 5 and et cetera, that's already done at 16,768. And if that's the case, then we're just in this initial decline down, and what we're finishing is just the first minor third wave down, similar to the S&P. Okay, if that's the case, we've got much stronger downside coming in the very near future to complete this initial larger leg down of a much larger correction. But right now, I continue to view the NASDAQ with the possibility that we will have a strong intermediate fifth wave rally, possibly within this first quarter, and we will go up and produce new highs. Again, they're already predicting, and now we're taking it off of Netflix earnings report, that they're expecting a slowdown. So therefore their memberships, their subscriber base is going to shrink a little bit. less people are going to be coming in and accepting Netflix, et cetera, et cetera. So that could overflow and go to, maybe there'll be a slowdown coming from Apple. It's going to just depend, again, on forward guidance. So, but if we have a couple of these tech companies, i.e. Google, Amazon, blowing the doors off once again with strong forward guidance, then I think that we start to rally, and we rally like there's no tomorrow. So again, if anything should change that negative picture, then I believe we could have a strong rally. In the meantime, I'm going to continue to focus on what is directly in front of me and to say downside is not over yet. I do not see it being complete just yet. So again, minute 3 complete, a minute 4 now in play. We get an ABC, and that ABC actually can take us, we need to now, I need to run it basically from here to here. And so we can almost reverse these and use them in reverse. But let me change this, and without creating too much confusion, try to get the yeah, 3/8. Actually, a minute 4th wave has the potential to take us back to 15,000. That'll really put a good little move in and be very tradable. So again, I think that if the 3rd is complete, we're going to get a decent rally, a very tradable rally. And here's our markers: 14,763, and then 15,000, right on the nose, 15,000. Now, again, what we have in between, we've got the 8, we've got the 20, these are moving averages at 14,665, 666 for the 20-day. Then we have the 50 at 14,877. And that kind of corresponds with getting up there towards that 382. But we've got the 382 at 15,000, and the 200 is all the way up here. Now, the moving averages remain solidly and lined up for the continuation of the downside. Yes, the 4, which is the most sensitive out of the group, is beginning to go flat and maybe start to turn higher. We're getting slight little turns on the hourly chart. That's just the buying that's coming in now. So what can we look for tomorrow? Unless this 5th wave is not complete yet, and this is just a small 2, then we're going to get a stronger 3rd wave down. Then I'm looking for a break towards 14,000, with ultimately finding some support in these higher end zones, and I call them higher end simply because of where they sit in terms of the 5th wave. They're certainly not higher end in terms of where the whole market has been. A break below 14,000 would push negativity right back onto the shoulders of anybody looking to buy. And so again, I'm going to stress, we must trade what's in front of us. I know that there's some of you that are swing traders, and some might even be position traders. So you're trying to position yourself for all these possibilities. And I also understand that that can be a very difficult task to do, because the potential for the rally back up 500 points is as strong as the rally down 500 points. Okay, so that's where we're sitting. We're at 14,524. This is 14,000. This is 15,000. We're sitting right in between. So that's the potential. We can make a visit down there just to finish this minute 3rd and then start a rally, which of course will make adjustments to that level. By all means, that would push the 4th wave to where we are now. If this drops back down to here, then I'm only looking for 4 to come back up to there. That would be pretty much my take on all of that. Now, what outside of this, we get a 3 here, we get a 4, and that 5, that's the one that I'm expecting to break below 14,000 and to break below to these lower levels. Again, it would be a 5-wave movement down. So until it begins, until you can start to see the structure, it's very difficult to project what levels are going to be reached, but it would have potential of getting down to 1.618. And that is where wave C, I believe. Nope. Actually, wave C this is this bigger one out here. And that would come in down here. The 50% is at 13,682. 618 is at 12,954. That would be a pretty steep drop. But again, there's enough negativity in the market that it could happen. All of these are in play. Are they going to happen in one shabam? I would not go out on a limb and say yes. They are possible, but I believe they work their way down. We'll have to have lots of pushing up from the sell side based on, I'm going to say, earnings and news. So being that we're already off to a negative start in our earnings season, yes, the potential is there. The probability, you got to start giving it a little bit higher weight, but we need more information now to increase that probability scale and to increase the potential that it actually is going to happen. In the meantime, I'm going to look for the development here to see how this works itself out. Overnight, I'm looking, we've got resistance at 14,576, 14,675. Then we start to get up into the 14,764 area. That would be if we break above that 20 with enough oomph, then we're looking for this. And then we're up into that zone for a minute fourth wave. Downside, we don't get very far. We're probably held below there. The market turns lower, but if it's going to drop in a fifth, it's going to drop quick, just like we have all the way down. It'll turn, it'll just start going, and the sellers are going to be there, and they're just going to push. They're going to push, and they're going to push. Okay, so that would be my take on that. Continue to trade smart. Do not try to pick a bottom. And I shouldn't say do not. All of us at times would figure like, okay, we're going to bounce. Bouncing is one thing. Picking a bottom and placing a big position on is another. So I personally will not attempt to pick a bottom because there's just no way. There's no way in a situation that we're in that you could say, I can tell you where support should be found, but what happens if it gets there and support doesn't hold? Right now, this was strong support. And I talked about it. And it's held. It held. Yes, that bottom number was exceeded by about 20 bucks. But it bounced right back. So how it gets there and how quickly it jumps off of it is going to be giving you the clues onto what's support and what's going to be broken. All right, I'm going to leave it there. Trade smart, use the moving averages, use the Fibonacci, put in your retracements. We also have the extensions coming off. We have retracements for what we know has already occurred and what we're looking for on the coming back up. All right, the next update, Monday, the 24th.